Welcome to the Swing Trading with Cycles channel. This is our update on Taiwan Semiconductor. So we're going to do this one on a single stock. It's November 21st. This will serve for a long-term viewing though. So it's November 21st, 2022. But I suspect at least parts of this will still be relevant, this time next year, 2023 even, because we are going to look at the longer term trends. So we're also going to look at Taiwan Semiconductor compared to the SMH, which is just an ETF that tracks other semiconductors, right? And then we're going to look at that compared to TSM in absolute terms, and we're going to zero in on a couple of time frames as we usually do. So on the left-hand side, this is TSM, Taiwan Semiconductor, huge semiconductor company. And then you have this on this end, TSM divided by SMH. So when this is going up, it means Taiwan Semiconductor is outperforming the other semiconductor stocks. So we'll turn this over to a 12-month, to an annual chart. So we love these charts on this channel. Each candle is one entire year of price action. So you'll see for the Taiwan Semi absolute chart, it starts in 1997. So this candle is 1997. It happens to be a red candle, and this candle is 2022. Also happens to be a red candle. The SMH only goes back to 2000 because I think that's probably when that ETF launched. So let's see, actually, let's compare it to the SOX. Give ourselves a little bit more room. I'm assuming that's actually less time. Okay, let's just keep it as SMH. Okay, so first thing that you'll notice is that the peak for TSM in absolute terms was actually this year. So what was that? 145, 142. So we peaked in 2022. Again, that's another word for a swing high. And in absolute terms, we actually peaked in 2009. Yikes. So you can kind of see that pretty clear. And just for reference sake, 2009 in this chart is here, right? Just to kind of orient you. I'm going to just draw this. This is not a swing high, but I'm going to just draw it here. So you can kind of see since that period, we basically just chopped around relative to other semiconductors. Even though it's been a massive move higher, this is such an important concept because what that really means is you could have made more. Like this just hasn't done as well as literally just the entire index, which is theoretically less risky. You have less single stock risk, right? And so but at the same time, basically since it launched, TSM has been outperforming the index, or the index of semiconductors, that is, right? We have this beautiful uptrend. Now we've consolidated. At some point, we're going to trend higher again, and that'll be the time to be long TSM relative to the semiconductors. Because right now, and if we're even looking at just this particular year, we're obviously red for the year for semiconductors, or excuse me, for TSM specifically, but we're also red compared to the semiconductors. It's just not the place that you want to be. If we look at this yearly chart, the salient feature is by going below the low of last year. So the low of last year was 107.58, and we're down here at $80. So we're 20% lower than that level even. That made this a massive swing high. And I'll zoom in on the annual chart because you can see there were other swing highs that happened as well. So this one was all the way back in 2000. This was your 2000 bust, right? That following year, we made a swing high and we kind of languished below there for 3 or 4 years. Actually, really, up until 2008, we just kind of consolidated at the lower end of the range and then finally broke out and started moving higher. And so that doesn't mean we're going to start like a 4 or 5 year period of doldrums, but that's important to be aware of, important to know about. And again, this relative chart is so important. If we look at it on the monthly level, so that's interesting. So on the monthly level, we're trying to like reverse that trend on the ratio chart. So TSM is trying to outperform SMH right now. And you can see this is your long consolidation period on the annual chart. This is just monthly. So you're seeing more candles. And you can see that we kind of broke this critical level, right? And this is a ratio chart, of course, so like doesn't tell you what the absolute price is doing. But we broke below that level last month, closed below it, and now we're firing back up. That is a bullish outside. That's not a bullish outside candle because we didn't make a new low. It could be. So we have that. We have our top here. And it could be that we actually are starting to bottom as relative to the SMH, right? So like it could be that we're just about to start a period of outperformance. Now, be cautious though, because this also looked like that as well in real time, right? Looked like, oh wow, we're gonna go off to, okay, we're gonna be back in the, and then no, right? This also looked, I mean, this was your blow off, right? Or I should say, this is the third test. You can actually see more clearly now this kind of triple top structure. So on the annual chart, it was hard to see that, but you kind of came up there once, came up there twice. You could even say like this failed massively to kind of get back up there. And now we made another push. So you can almost think of this as like a series of false breakouts. Not great, not great, right? And again, this is your ratio chart. And so this is really just telling you, you maybe don't want to favor Taiwan semi over other semiconductors until this thing proves itself. So we first need a swing low. So we need to make a move above here. And then we're going to be watching very closely. We'll continue to provide updates on this channel because then we're going to be looking for, you know, something like that, right? Maybe we back test it and then we just continue to move higher. And again, not to belabor the point, but this is a ratio chart. So it could mean that semis are moving higher as well, but TSM is just like outperforming them, which obviously would be great. And if we look at TSM on the different time frames, so let's look at the daily chart. So daily is an interesting place. It looks like we just made a major bottom, right? And we'll actually draw that. Oh, I see what happened here. You've got to flip this. Sorry about that. So this is obviously some kind of, I don't know why this is inverted. That's interesting. So let's just delete this. But you get the point, right? Like this is your daily cycle low. Let's call it like right here. So we've now been rallying for, you know, this is day 13. Looks like we have a top on day 11. But also notice we've been consolidating for 4 days above this gap zone. So we gapped up from here to here. And now we're just consolidating. It was about, wow, a $5 gap on a $73 stock. That's pretty significant. But we've managed to stay above it. And so if we can stay above, I mean, just call it $78.50, that potentially means we continue to move higher. And if you look at the weekly chart, if this is your daily cycle low and it's only a day 13, this appears to be, call it week 3. This is week 3 of your weekly cycle, right? And I don't know why this thing is not cooperating with me. How do I invert that? Well, I won't worry about that now, but you can imagine that this is an up arrow. So this is week 3, right? Now notice we had like a pretty massive move these 2 weeks. Let's see, what is that in percentage terms? Like just those 2 weeks. Wow. A 32% move in 2 weeks. So that's going to take some time to digest. It moved 20 points. And so right now we're just consolidating in the weekly candle, which makes sense. That consolidation that you saw for those 4 days, that's what's kind of causing this. So we really want to hold the last week's low, which was, and because it was a big week, it's going to be far down there, right? Which was $72.24. We're up here $8. So that's another 10% down. But this whole thing is essentially a chop zone inside this range, right? And again, because with a 30% move, and how big a stock are we talking, like market cap? Wow, right. This is a $400 billion stock. So a 30% move is a huge amount of market cap difference. So we could chop here for even a few weeks. And notice this yellow line is your 200-week moving average. What looks like it's about to happen here, and this blue line is your 10-week moving average. Now I know there are talks of like recession, and you know if the U.S. has a recession, it'll probably have global impacts, etc. And so there's no telling that this is a long-term bottom. But even if it's not a long-term bottom, you could still see a rally up to like the $90 area, like up here. That was your last cluster of that was your last lower high. I mean, notice. This is a little low here. and then we rallied for 1, 2, 3, 4, 5 weeks before rolling. I mean, I guess this was probably a high for 6 weeks, and then we rolled over. So now we need to be on guard. Are we going to rally here and then just roll over and make a low below here? Now this rally certainly looks different than this one. You can see there's a lot more momentum here. Just there's like we literally went up 30% in that period of time. What was this rally? Let's see. So that's important, right? In 6 weeks we rallied 22% versus, or 24%, let's just call it even, versus 33% in just 2 weeks. So this is telling you that there was a lot more buying pressure, if you want to call it that. And if we look at what that did to the monthly chart, that this is an important feature of multi-time frame analysis. These 2 massive weeks have created a swing low on the monthly chart, right? I mean, a beautiful swing low. So by going above the high from last month, so the high from last month was $74.92. We're well above that. Call it $75 even. We're up here at 80. So that area can be a risk level, right? Like, and notice that level is right around where that gap is. It's not a coincidence. You could easily see a move where a world where we fall below that, and then we spring back up, so it becomes a false breakdown. But that's what you want to see. You'd need to see a swing low the same way that we had this swing low that resolved in this higher move. That's what we're kind of watching for here. So definitely could be the early makings of a long-term bottom. If not, still could be some upside left to go before we roll over some more. But that ratio chart we're going to be watching very closely. When does it start to outperform the other semis?